Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Tuesday, November 8th, 6:47 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Okay, of course, today is election day. Make sure you make your voice heard. Get out there and vote. Let's dive into the charts. Taking a look at futures, Bitcoin's down a whopping 5.5%. Those of you that trade it probably know a lot more about what's going on than I do. I saw some flashes about that exchange FTX. I don't know if that has anything to do with it, but if you're actively trading it, you're probably way more up to speed than I am. Oil's down 1%. Equity is more or less flat, but up a little bit. Nat gas is down 6%. I already mentioned the election today. I thought price action yesterday was generally pretty good. So we'll have to see if the market is, kind of front running whatever they think is going to happen. And then we got the big one on Thursday, CPI, which could, probably will be certainly a market-moving event in either direction. Let's bring our focus to the dollar. I think it's one of the most important charts in the deck that we review on a regular basis. And second day in a row, we've had a big drop. We're back below trend and challenging this 109 support area. And I would really encourage you guys to, even if you're not trading it, really be hyper-focused on the dollar. I think, a break here would really send, let's say, shockwaves, but certainly be a big trend shifter in the marketplace. I think your commodity complex is going to jump. It's going to be supportive of equities going higher, and I think we'll know it when we see it. The energy complex, the copper complex, all that stuff. All the way through base metals, everything. I think it's going to be a real boost if the dollar cracks. And even if it just pulls back to the 200, that's going from 109 to 105. I think that would be a big catalyst into year end. So we'll have to watch that. TLT, however, has been going the other way. We hypothesized of a breakdown back test fail, and TLT was down 1% today. So I would be watching this one as well. Watch how it behaves if it comes down here to 92, because what could happen is you get that classic double bottom. Notice that if we come down to 92 up here on the PPO and RSI, we're set up for bullish divergence, right? So we're at a low in price, a low in PPO, a low in RSI, but you can tell if this were to come down for a quick tag and hold there, then your momentum and your RSI are going to be at higher levels, and therein lies the bullish divergence. So if you were interested in trading this, 92 gives you a very objective long, knowing that you've got bullish divergence, knowing that you're at a prior low, and then you can set a stop just right below that 92 level, wherever your risk tolerance lies. And then you'd be set up for the second half of this, the classic W formation on a bounce. So keep an eye on that. VIX continues to fall. This has somewhat baffled me. We've had a big drop in the VIX, but we really haven't seen equities, rocket by any means. But it is falling, so that should be supportive of equities going higher. And now we're below this 25 pivot with technically an open door to come down here and test and possibly fill this gap down here. And if there is a post-election rally, and if CPI comes in at a level where the market reacts positively, we could get that gap fill, and we could be set up for a year-ending rally. Don't want to look too far ahead, but for now, we've definitely broken below that 25, which I think is significant. There's the big drop in Bitcoin. If you had bought this breakout, you got to move all the way up to 21.5, and now it's rolled over and lost that cluster of EMAs down below 20,000, and now support is back at 19,000. So a lot of positive work has basically been nullified over the last couple days, and then certainly this morning with that big drop. So what we've actually done is, we're still in this trading range between 19,000 and 21.5. Oil had an interesting day yesterday. You can see a reach up candle right to that 94 level. And, again, when you see that, you've got the right level. When you get a reach up candle that goes right to a pre-identified level that you had on the chart, we've got the convergence of lateral resistance at 94, and we've also got the 38% fib retracement at 94. So 94 is really shaping up as a line in the sand. And what's interesting is, maybe I can just do it here for you instead of, that didn't work. Let me see if I can get it for you. We do have somewhat of a head and shoulders setup on oil. That's what I was trying to show you instead of just tracing it out. But you can see that with this head and shoulders setup with the neckline at 94, you got a measured move going from 94 down to 77. So if you add that amount here, you got a really nice measured move on a breakout above 94. So even if you haven't been involved, I think that's a really important place to watch on the oil chart. And like we said, and we'll go over it later in the presentation this morning, that energy stocks have been off to the races. One of the things that you'll see if the dollar cracks is you're going to get a trigger on gold, I would imagine. The gold miners here, I've got my alarm set at 25.50. You can see this more or less a fake breakdown and then come right back up. We're above the 50. And if you see the dollar break, I think you're going to see a big breakout in not only gold, the metal, but gold, the miners. One thing I'm not hepped up about is, getting all bulled up with the oscillators at overbought conditions. It's just not a great. You can see the New York is at a much higher position than NASDAQ. NASDAQ has been lagging, but at the high end of the oscillators, if you get long, you gotta have things, really tight in case you get that snap reversal. SPY, interesting spot right here at the 50. I've moved the pivot up to 380, which is right at the 50. On a break above, you got 385 and 390 as a little resistance zone. You see the prior highs here right at 390. If it can't get through, then it's subject to rolling down to 370. But certainly right here at 380, we've got a beautiful pivot to work with. I've got an intermediate level at 384, and then our upper level here at 388, 390, which were the prior highs from before. So we've got some really clean levels to work with for you active traders, and this 380 being the key level, being where the 50 is. You can see on the Qs, not as powerful a setup in my mind. Price is still below all the moving averages. You can see the 8, the 20, the 50, and the 200 all bearishly stacked. One thing we do have that the Qs have going in its favor is this double bottom look with some bullish divergence in place. I think your pivot this morning is 270. We're a little bit below it. I think certainly if you're an active trader and you can get an entry at 267, you may get that push up to 270. But I think the most important pivot is going to be here at 270. If it can break above that, then I think you got a pretty clean $5 run up to 274. IWM already above the 20 and the 50. So on a relative basis, stronger than SPY or QQQ. Didn't really do much yesterday, up 0.5%. What I've done is drop in a couple little channel lines just to give you a visual reference. As we've been saying all along, I think as long as it stays above 176, things stay relatively bullish. We've got this consolidation area boxed in between 176 and 179. So as long as we stay above this 179 here, then on a measured move basis, we can get up to 180 and a half for starters. You can see yesterday we had 2 reach up candles to that midpoint. And if we can get through that, then I would say pretty much a clean run to 182. And then your next target is the prior highs at 185. I would be pretty cautious if this rolled over and we lost 179. Then you're back in this trading range, and it would be susceptible coming down to 178. Meta had a nice day yesterday, up 6.5%. Of course, that was on the news that the company is going to start laying off a bunch of people, and it's unfortunate, that a bunch of people got to lose their jobs to have a bullish catalyst. But I think most people recognize that their expenses are way out of line on this Meta adventure. So that resulted in a bullish move. And you can see again we've got these levels dead to rights. We had a prior high. We had, let's do it this way: support, support, resistance, 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 resistance. We know right here at 97 is the prior trading range. So if you get a break above 97, you want to get long there and look for 102.5 for a move back up to the top of the trading range, and then you've got the massive gap above. Should there be, a year-end rally or whatever, that would be your next big level at 102.5. Apple made some inroads yesterday. I've dropped in a downtrend line on the 1 hour chart. I think your most important level today is going to be 140 at the intersection of lateral resistance and downtrend resistance. If you wanted to get long against 38, that's fine, but I think this will be a sticking point at 140. If price can take out 140, then you go up to the bottom of the gap at 142.80 with a target of 145 if that were to fill. So again, some really clean lines to work with on Apple. Things have turned for the worst on Tesla. If we take our TA principles, we've got a fast down leg, a consolidation. I like to call these flat flags, and then a break, a decisive break yesterday, down 5%. So we're clearly below the prior lows. We've lost the prior lows of this trading range. And so now Tesla is really up against it. Just from this trading range here, that's $25. So a $25 measured move from 210 puts you down at 185 as the first measured move target. But if we look at the bigger picture, you've got a down leg here that you could lay on from the top of the flag, and that puts you way down. Now, I've validated this 185 over on the weekly chart, and I'll show that to you now. We've got a line going way back into 2020 that you can see comes across right here at 185. That would be that first target. But bigger picture, you break 185, then certainly 160 is in the crosshairs. And, I don't know if, this is a comment on Elon and Twitter getting sidetracked, distracted with his new toy or whatever it is. I'm just going by the charts, and this is a, I really think the last stop is 185. If it can't hold that, then I think the floodgates will open there and look for a much bigger down move. Moving on to Microsoft. Again, we've got a really nice pivot to work with here at 228. We've got a breakdown, and now we've back tested that. We recaptured all these lows, so that's a plus. So I think, strictly speaking, a break above 228 opens up the top of this trading range, and we go back to that number that we've had for a long time, that 235. And I view that as not the ultimate pivot, but certainly the most important pivot on this chart. You can see a big line of support, a big line of resistance, big line of support, big line of resistance. So if Microsoft were to somehow break above 228, get up to 235 and break out, then that puts this big gap back in play. Weekday for Amazon, nothing really happening, just consolidating here along the bottom. I think you've got 92 on the high side as an alarm that you can see opens up some room on the volume over price profile, a little easier to operate up here. And I would have these lows marked as well in case the whole thing falls apart, because there again, as long as this consolidates, you can certainly make the case for this being a first leg of a down move followed by consolidation. And if you were to get a breakdown below 88.50, then that opens up a whole bunch of additional downside. Google was up 2%. Nice little breakout above the downtrend line, breakout above 87. Right here in no man's land, I don't really think you've got an objective trade per se. But if you got a pullback into 87 that held, I think that's a good objective level for a long with a stop below. Or you get a breakout above 89.50, then you've got 92 in the crosshairs, and then 92 becomes really important. Why? Because you've got this prior low here to take out. You take out 92, then you can come up to 95 and 96.50. And once you get your charts lined up and you get these key lines on your charts, that's part of what I bring to the table, is giving you these levels. All the levels that were important on the way down are equally important on the way back up, and then you're just trading around them, recapturing levels from below is a bullish move, and you can ratchet your trade all the way up as long as the move proceeds, and just be ready to react at resistance. Either go to the bank and stay long, or take it off and reverse. That's only one of two things can happen here at 92. It either gets rejected for a breakdown back test, or it breaks out. Those are really the only two things that can happen there. And that's where your skill as a trader really comes into play. Netflix is still kind of struggling. Broke into the lower gap. Kind of got down to this 252 area. I think here in no man's land, you're just waiting for a decision point at 262.50 right here, back up at the bottom of the bracket or the top of the gap, depending on how you want to look at it. If the Qs can get going, if there's some kind of a rally and you get a breakout above 262.5, then your targets are 270 and 279. If it gets rejected here, then the door is still open for a move back down to ultimately fill the gap below. Semis had a good day yesterday, up 2%. And what's really interesting and important from a trading standpoint, we are back at the prior highs and right at the bottom of a $5 gap between 195 and 200. That is definitely a long I would take if things look bullish. That would be a really nice move to capture. And you can notice here, pretty significant void in the charts. Not a lot of trading in this area. So I would imagine that a good break into that gap that holds, that you could get a really productive, fast move on the semis. And then at 200, if you got this relatively early, I would definitely go to the bank at 200, take off, capture that $5, and then see if the rally can proceed and get above 200, and then above 200, you got another $4.5, $5 move up to the next level of resistance. So that potentially could be a really nice trade. So keep 205 in the crosshairs of for semis. Not a lot going on in ARC. Nothing really has changed on the daily charts. We're down here towards the bottom of the trading range. If you wanted to be long against 15, that's certainly objective. See if you can get a move back up to the midpoint, but you got to hold this 15 level. ARC-G, not nearly as good as the others, down about 3%. I've moved this pivot down from 31.5 down to 31. I thought there was more. Although we do have the high volume over price bar at 31.5, we do have a bunch of lows right here at 31. So I moved that pivot down to 31. As long as it holds that, I think you could be long against it, but a break below opens up the door for further downside. Same thing with ARC-K, down at the bottom here at 34. It's got to hold. You can see really right in through here, we've had a lot of touches at 34, and support is support until and unless it breaks. So if you wanted to, if you got a push down into 34 that held, you can give that a shot on the long side if that's something that you want to trade. And same kind of thoughts here on ARC-W. Not quite as close as ARC-K, but you've got a low here at 42. Here in the middle at 44. I don't really see much of a trade. I'd have 46 and 42 alarmed. And of course, BTU that we flagged over the last couple of days has done a moonshot. It was up 11% yesterday. And you can see this is, in my mind, a significant breakout. Why? You had a high, you had a high, and you had a high. So we've broken out to, what is that? 1, 2, 3, 4, 5. We're at 6-month highs, and you can see the prior high was up here at $33. So that is my first target. And if you've missed this move, you can still watch it, because BTU is a very, very volatile stock. I mean, we've seen this with these, big bars. If you got a pullback into 28.50, all this is support now. So if you got a 28.50 entry or something close to that, I think that would be a really, really nice entry on that. And I wanted to show you yesterday the interesting price action. There was a big opening candle, but then this is the 60-minute chart, you got a back test of what would that be? You got a back test of Friday's high. You see you got a high here and a high here, and it came back. So that would have been an objective entry. And if you were Johnny on the spot and were ready for that, you captured that entire, or for the most part, you caught that, 10% move. But you had to be quick. And, you got that back test. Moving on to refiners, seems like for every day up we get another pullback, but bigger picture, we're holding the breakout on VLO, and it's walking the 8 EMA up. I'm in, what am I in? November 130s. So I'm sticking with that. Hopefully we can get a push up here over the next few weeks and get those a little farther into the money. Moving on to ExxonMobil. I mean, it's not spectacular, but it's grinding. It's also holding the 8 EMA. I like the way that looks. Moving on to some other integrated names. Chevron has broken out here from the prior high back in June and is also working its way higher. And I want to show you some of the other integrated names that we've had on the radar. You may have positions in these. We flagged the breakout on ConocoPhillips way back when at this 117, now trading 135. Also riding the 8-day. Moving on to Hess. We flagged this cup and handle back in the day at 130. Also making nice inroads. Had a little consolidation here between 140 and 145. Seems to be emerging there. If you got long anywhere along in here, I would stay long. Of course, I don't know what you might have as far as strikes and where you might be positioned. But what I would do is what I always say to do is, when you get deep in the money, roll it up, buy some extra time, and just stay long and stay in this trend, because we had a healthy, June, 1, 2, 3, 4, 4.5 month consolidation. And usually what you see is something like this, where price consolidates for a while and then goes on a run, consolidates for a while and then goes on a run. So this in conjunction with oil, remember, we're flirting with that 94 level. If you get a breakout on oil at 94, I think these names and your other E&P names are gonna just simply explode. Here's Marathon, more of a refiner, but taking out the prior highs, also riding the 8-day. See if there's any other ones here. Oxy. This one may actually be an interesting trade. If you see, we got the prior highs right here. Well, right here, right now at 76. I think if you got a breakout there, that would be a very objective level to take long, and then you can trade against 76 on this breakout if you get it. So I think that would be a really nice one to focus on if you're if you haven't been long, Exxon, or if you want to pick up another name. This one would be really, really objective right there on the breakout of the prior high. This is Petrobras. Yeah. Doesn't look anything like the other energy charts. This is Brazil. Remember, they just had these elections where they elected the leftist, and this is a weird one because politics may be involved in our domestic ones as well, but this one went the other way, so I don't really see much to do here on Petrobras. a lot better domestic names to focus on rather than something like this. So let me just, I got Freeport here. You can see Freeport, which is the copper complex, of course. You've got a low, you got some lows in here, and large volume over price bar here, coming in right at 35. You can see that price has recaptured all the moving averages, and you've got the 200 here at 33 and a half. You get a breakdown in the dollar, and I think you'll see a pop in copper, especially if China makes some moves to relax its COVID regulations. I think this is going to do a moonshot. So if you're willing to take a little bit of heat against 33.50, I think that would be a nice long. You can see the fast moving averages are really starting to accelerate higher. And so if you had an alarm here, let's say, I'm just eyeballing it, 35 and a half, and you had an alarm at 33 and a half, I think you can use that as a little bracket for a copper name. And if you get a breakout above, you can take it long. Or if you got a pullback into the 200 and all these moving averages that are coming in higher, you might get a little bit better entry, and then just see if the dollar breaks and copper goes higher. So I think that might be a nice trade or a nice stock to put on your radar screen. Other copper names: Tech, TECK, and Southern Copper. I have not looked at these charts. SCCO, Southern Copper. Other names you might want to look at in the copper complex. So let's wrap it up there. I hope you got a lot out of the video. If you're new to the channel and you like a game plan each and every morning, I encourage you to hit the subscribe button, the alarm bell on YouTube, and then also in the show notes, you'll see a link to the blog site where you can drop in your email address, join the team, get an invite to our trading room, and then you'll get all my content delivered right to your email box each and every morning. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.